It's a pleasure to be here today, ladies and gentlemen, and thank you so much, Strathmore Business School. This is one of those universities that I would have wanted to be a student of, but, I guess I'm not too old. I can still be a student. But when I was doing my undergraduate, I don't think Strathmore was born yet. How old is Strathmore, by the way? 63 years. The business school. Okay. The business school is I thought so. Great. So I just want to talk about inclusive finance. And as we're talking about inclusive finance, I just want to say that when it comes to financial inclusion, this country has come a long way. And it has come a long way because of one thing, actually maybe two or three. But at the anchor of it is fintech. We've moved to people actually having a bank account. And by the way, as Kenyans, when we are talking about a bank account, we're not talking about traditional bank accounts, are we? When was the last time any one of us walked into a branch? Into a bank branch? When was the last time? Mary, when? Yesterday. Maybe you needed a big loan.
My bank wasn't working. My online bank wasn't working.
Okay. So that's really an emergency. I'm talking about actual day-to-day banking transactions. When was the last time you actually did that? I personally can't remember. I can't. And yet, we are still just scratching the surface. The other reason is an enabling policy and regulatory environment and framework. And of course, innovation. So today I just want to talk about how crucial financial inclusion has been to this country. But for us to really move to the next stage, we now really need to ramp up what the ecosystem is doing. So first, let's just take a quick look at what really this financial inclusion means. First, obviously, it's crucial for economic development. The more of a country's population and business community has access to financial services, the more that economy actually grows. Tech is a key enabler of financial inclusion. It's actually interesting. 10 years ago, I'll probably have asked this question differently. Today, my question would be, who doesn't have M-Pesa in this room, or who has never used M-Pesa or mobile money in this room? 10 years ago, the question would have been, who has used M-Pesa? This is how far we've come. Fintech companies are driving financial inclusion. There's no doubt about that. And if you have any doubt whether M-Pesa is a fintech, I am here to lay down that doubt today. M-Pesa is a fintech. And without M-Pesa today, without M-Pesa's rails, no bank in this country can claim to have any mobile banking or digital banking strategy. This is actually a shocking conversation to have. That banks cannot have a digital banking or a mobile banking strategy without a player that is not a bank. Financial education is actually becoming more and more important today. So instead of talking about financial inclusion, we should start thinking about financial wellness. Because The flip side of this is that easy access to mobile loans can also have unintended consequences. These are the barriers to financial inclusion in Kenya. Low levels of financial literacy, we've talked about that. Most don't understand and appreciate that if you are taking 2, 3, 4, 5 mobile loans, do you know the average number of mobile loans Kenyans take, the average Kenyan has? Anyone can hazard a guess? Daktari, do you have those numbers? Average 3. That's the average mobile loans that a Kenyan takes, the average Kenyan takes. There's Mshwari, there's KCB M-Pesa, there's Tala, there's Branch, there's Sijui what, yeah? So we're always playing Russian roulette with our financial lives. You pay this one, you take this one, you pay this one, and all it takes is one bump in your monthly income and you're in trouble. And that goes to talking about credit scoring, which we will talk about slowly. So these low levels of financial literacy, we need to deal with that. Inadequate infrastructure. It's sometimes when guys out of Nairobi tell you, oh, umetoka Kenya, they actually mean it. Because we seem to have forgotten places like Turkana and Marsabit and stuff like that. Those areas, despite the fact that the government has a very ambitious project, the National Optical Fiber Backbone. The issue is the last mile. So you have all this fiber across the country. Fiber has reached each and every district of this country today, county, as we call them now. But moving that fiber from what is called dark fiber that is not used to fiber that is now being used for connectivity is still a challenge. So that's an area that we need to deal with. And without that connectivity, we have limited access to financial services in regards to digital financial services. Regulatory barriers. One of the things we keep on saying in the fintech ecosystem, and I'm going to miss no words here. I'm an equal opportunity offender when it comes to these conversations. The fact of the matter is that this country's policy and regulatory frameworks have been extremely forward-thinking up to now. If it weren't for the forward thinking at the leadership level of the central bank when M-Pesa was founded 13, 14 years ago, as we were having breakfast with my colleagues and Daktari here, we were discussing that and we were saying, without that forward thinking, without that enabling environment then, we would not have had M-Pesa here today. But how is the policy and regulatory environment today? In one word, I think it's challenging, especially for fintechs. And we, as the association, are basically saying we need to engage more with government, and we need to have a more robust and more friendly fintech policy and regulatory frameworks. Socio-economic factors, that's a barrier. I have a friend of mine whose WhatsApp status reads, "Na ya kutoa je?" You understand what I'm talking about? The cost of transactions. For some of us, we may not think about it, but for someone at a certain social level, that cost of transaction of mobile money or fintech transactions is a difference between him eating and not eating that day. That's the reality on the ground. So the question that we are going to continuously ask ourselves in the financial services ecosystem is, when are we going to stop paying for payments? Am I making sense? What do you have to pay for payment, for paying? Some will say convenience, that's fine. But as the ecosystem is evolving, we are going to start seeing more players layering more innovative services on top of that. And the drive to zero transaction fees is going to be inexorable and unstoppable. And already we are seeing some fintechs like SasaPay already starting to think about layering and cutting down those costs of transactions. Kenya and Africa is a very youthful country and continent. Median age in Africa is 18.5, 19 years. So as we are talking about financial inclusion, we will not complete this conversation without talking about youth financial inclusion. And these have to be anchored around education, economics, institutional, technological, legal, political, social-cultural. Our youth are our future. And I'm tired of hearing this nonsense. Forgive my language on this one, but I'm very passionate about this. I'm tired of hearing this nonsense of African leaders across the continent talking about the youth dividend when our youth are dying trying to cross the ocean going to Europe. I mean, what is wrong with us? This continent is potentially the richest piece of land anywhere in this world. And yet our youth are disenfranchised completely. So we must deal with this without fear of contradiction. So we can't be talking about financial inclusion, financial wellness without talking about the youth. And as a father, I can tell you I am also deeply passionate about this. The role of tech in driving financial inclusion, I don't need to talk about mobile money and M-Pesa. We live it every day. Digital lending, we've talked about that. The flip side of this is simply that digital lending can also be a great enabler and also a great disadvantage where people start being irresponsible with their money and taking loans without thinking about the implications of not paying for those loans. Financial technology is anchoring a lot of this drive towards financial inclusion. Empowering women and underserved communities. I cannot emphasize this point further. Fact. Women are more likely to pay their loans than men any day, any time of the day or of the night. That's a fact. That's a fact. Whether they're more responsible, I don't know. We can have a conversation. or whether men pay more fair than women. I don't know. The fact of the matter is that statistics tell us that the woman on the ground who is accessing microloans, their chances of defaulting are much, much less than the man on the ground. So let's explore that phenomena as we live here today. Why is that? How do we empower our women folk, our mothers, our sisters, our daughters? You know, today in some communities, a woman can take a loan without approval from the husband. I'm like, are we living in Babylon or what? No, seriously. Yeah, so this empowerment is very, very important. Serving the marginalized and the underserved. And that's why I'm talking about the issue around payment fees. And I like the fact that players like M-Pesa have decided zero transaction costs for, I think, 0 to 1,000 shillings. Is that 100? Yeah, they need to increase it to 1,000. Yeah. Financial literacy in education, I cannot emphasize this further. And we have a number of players coming up now really focusing on financial literacy education. Players like Abojani, run by a good friend of mine, Robert Ochieng, is driving these conversations. So please look up Abojani. Just Google Abojani. That's Abojani. And other players, they're starting to drill into this financial literacy education. Yeah. Africa's Pocket is another one. I saw it the other day. Please, if you have young adults coming up, young children above the age of 12, it's never early enough to start these conversations with them. Some of us wish our parents started these conversations early enough. But a story for another day. Innovative financial products, peer-to-peer payment apps. Today you have payment apps that can actually connect people directly without having to go to banks or other financial institutions, and that's growing. Virtual financial advisors, or robo-advisors as they are known, using artificial intelligence. The largest asset management company in the world today, called BlackRock, uses artificial intelligence at a scale that is unimaginable. They have a platform called Aladdin, very aptly named, that allows them to make investments at scale that a human mind would not be able to fathom. AI-assisted customer support. A lot of people are afraid of artificial intelligence, and we have a very knee-jerk reaction towards artificial intelligence. My advice is delve into it, read about it, start using it as a utility instead of saying it will never affect you. Machine learning, a component of artificial intelligence to some extent. Fintech with social media, better business features, and so on and so forth. There are many, many financial products and services. What I can say is that Kenya has been at the forefront of innovation when it comes to fintech. Did you know that 1 in every 10 human beings that uses mobile money regularly is a Kenyan? That's some homework for you guys to take home for. Partnerships and collaboration for financial inclusion. Government initiatives are crucial. Private sector engagement with government and with other players, and community partnerships. One community partnership I would like to talk about today is a company called Shofco. Anyone has an organization called Shofco? Anyone has heard of Shofco? What do you know about Shofco? Sorry, you want to say something? Shofco? No one? Yes. Tell me about Shofco.
I know very little, but I know it's founded in Kibera by one of our own Kenyans, and its aim is to empower the local person with economic activities, and it's all over the country.
Shofco today has 3 million members. Kennedy Odada has just been named one of Time's 100 most influential people in the world. As a Kenyan, I think we need to give him a standing ovation. I mean, this is the kind of innovation that we are talking about that doesn't necessarily have to be anchored by technology, by sheer will and the goodness of somebody wanting to help people around them. Thank you, guys. Regulatory environment and policy reforms. I've talked about this. I don't need to belabor this point. Let me tell you guys. Government can be the most enabling entity ever, and we have seen this in Kenya. Government can also be one of the most craziest stumbling blocks for economic empowerment. Yeah. So as citizens, we must be able to engage with our government and continuously engage and push them towards forward-thinking policies. After all, they are serving us, not the other way around. Ama namna gani? Proportionate regulation. Tailoring regulation to the needs of different financial services providers. For example, if you want to regulate a fintech, the same way you're regulating a bank, who are we helping? They're different, right? And we are not saying that fintechs shouldn't be regulated. No, far from it. They should. And we also appreciate that policymakers and regulators have a fiduciary responsibility to the citizens of any country. And we are here to ensure that we help them achieve that fiduciary responsibility. Consumer protection is crucial. My sister here started by talking about not being sued for data on data protection issues. Let me tell you guys, we used to talk about this thing a few years ago like it's a dream, it will never happen. It's here now. Yeah. If you don't handle people's data according to the data protection laws of this country, yeah. I was about to say mambo ni matatu, but I'm told we can't use the term anymore. But you get the picture. The fact of the matter is that our data must be protected by the people who use it for our gain and for their gain. So you walk into a hospital, you're giving so much information about yourself and your family. If at any one point you are concerned that that data is not protected by that entity, what happens to our healthcare systems? Finance, our financial data, also very, very important. And yet, for us to move to the next level of financial wellness, we are going to start talking about terms like open banking or open finance, which the Association of Fintechs in Kenya, the Kenya Bankers Association, and the Financial Sector Deepening Organization, FSD, has a framework to work towards a policy framework on open banking, open finance in this country. But open finance has to be anchored on data and sharing of data. And if at any one point we feel that our data is in danger of being exposed, the whole edifice starts collapsing and crumbling down. So this is crucial. Using data to drive financial inclusion. Guys, I'm not going to belabor this point, but this credit scoring thing is very, very crucial for a healthy and robust, inclusive financial ecosystem. I keep on challenging my friends in the credit scoring industry within financial services, the credit reference bureaus. Even some of us, until very recently, we had no idea how it's like a black box, how your credit score is arrived at. We must be able to drill down into these things. We must take it to the level where we understand it the way we understand how mobile money works. Okay? And it is for those industry players to break it down to us like we are 6-year-old children. Who knows how their credit scores are arrived at? Who even knows what their credit scores are in this room? You see, we are laughing. I know it's, at one point it's a laughing matter, but it's also a very serious matter. Yeah? So we must be able to drill down. Don't just wait until you are getting a government appointment to run to CRB to get a credit clearance. That doesn't help you. Yeah? Key pillars to financial inclusion. You go from unserved, banks, fintechs, microfinance institutions, mobile operators, postal networks, financial cooperatives, move towards the served. And what's needed to get there? Broader inclusion, customer-centered product innovation, financial capability, strong consumer protection, better financial infrastructure, more and interoperable access points, and so on and so forth. Yeah. Don't worry, this presentation will be on my LinkedIn profile. I think it's already there. Call to action. Conclusion and call to action. We're not going to get there without embedding and appreciating and understanding and acting like a multi-stakeholder ecosystem. What do I mean by multi-stakeholder? I mean financial services players, both traditional and new, incumbents and fintechs, agri-techs, insurtechs, regtechs, regulators, policymakers, wananchi, community-based operators, institutions like Strathmore, and so on and so forth. And we at the association are the center of wanting to make sure that that happens. And as I come to the end of my presentation, I want to appreciate two ladies sitting in front of me who also serve with me at the Association of Fintechs, Mary Mwangi and Christine Kitale. Please just wave to people. By the way, the association passed the 30% women in boards from day one. You can correct me if I'm wrong, ladies. I think we're almost 50-50. Yeah. So we just don't talk, we walk the talk. Asanteni. Thank you very much.